There have been further steep falls on Wall Street, and once again, it's trade and tech causing angst among investors. The trade war escalated as China announced 120 tariffs of their own against American products. Meanwhile, Donald Trump ratcheted up his war with Amazon via tweet, attacking the company's business model and adding to concerns of further regulation in Silicon Valley. Andrew Robertson reports.
Alongside a surprised-looking bunny, Donald Trump talked up the US economy over Easter.
You look at the economy, you look at what's happening, nothing's ever easy, but we have never had an economy like we have right now, and we're going to make it bigger and better and stronger.
But on Wall Street, they saw a different picture.
The old saying is the market can deal with bad news, but it just hates uncertainty. It hates the idea that we don't know what the final trade deal is going to be with China.
One trigger for the latest sell-off, news from China that it will impose tariffs on 120 products from the United States, including things like pork and wine, which are aimed at people who voted for President Trump. When the dust settled, the Dow Jones Index and the wider S&P 500 had lost another 2% of their value, the tech-heavy Nasdaq nearly 3%. Investors are also starting to doubt the long-term outlook for the big tech stocks like Amazon, Facebook, Google, Apple and Microsoft.
It's the continued implosion of the FANG stocks, partly due to President Trump's tweets, partly due to what we've seen out of Facebook.
Facebook has been caught up in the Cambridge Analytica scandal, where it was alleged data it collects was used to try to influence elections.
Facebook has been far more reckless with its customers' data than some of the other players in the tech space. We actually own Alphabet in our portfolio, which is the owner of Google. We don't think that business is completely immune to this, but we do think they've been a lot more careful, and we think that they will be able to grow that business for longer than Facebook can.
Facebook shares have lost 20% in the last 2 months. Amazon slumped 5% this morning after the president tweeted about a delivery deal with US Post, saying the post office loses a fortune and this will be changed.
I just think it shows you that Amazon has become so big that everyone is interested in how much profit it's making and how much dominance it has.
Which means there's an increasing risk for the big tech giants that governments will challenge their unfettered growth with more regulation. Overlaying that, particularly in the United States, is another risk, which is higher interest rates.
A lot of their value is dependent on profits that are way down into the future. So the higher interest rates are, the less those profits are worth in today's dollars.
Amazon is still up 18% year to date in a market that's now probably down 3 to 5% year to date. So there's the, I look at it as Amazon and Netflix and a couple of these other really high-flying stocks that have been driving the technology momentum trade. This is a valuation correction.
Combine that with a maverick president in the White House and it seems almost certain that Wall Street's bumpy ride in 2018 is far from over.